In this video, we are going to discuss various types of deposit in a bank like current account, savings account, fixed deposit, recurring deposit, zero balance account and Demat account. So watch till end of this video and enjoy it. So let's begin. First, deposit are generally classified into two types. The first one is demand deposit and time deposit, which is also known as term deposit. Let's discuss about demand deposit. It is a kind of deposit in which the sum of money that is given to a bank can be withdrawn as per the requirement of the depositor. That means you can withdraw money on demand at any time without any prior notice to the bank, or sometimes 7 days prior notice is required for the withdrawal of money. It is of two types. The first one is savings account and the second one is current account. Then we proceed towards the savings account. In savings account, a limited number of transactions and limited number of facilities are provided to the customer, but in case of current account, unlimited number of transactions are provided. In case of savings account, we get a smaller rate of interest, but in case of a current account, no interest is paid to the customer. Everybody can open a savings account, and also minimum age required to open a savings account is 10 years. Most of the salaried persons and students have a savings account. Next, we have the current account. In current account, unlimited number of transactions and unlimited number of facilities are provided, and also no interest is paid on such account. There is no fixed maturity for a current account. These are specially meant for the businessman. Here it is important to note that minimum deposit needed to open a current account is 5,000 for an individual and 10,000 for a company. Also, many other facilities are given to the current account holders like overdraft facility and discounting of bills. Then we proceed towards the time deposit or term deposit. It is a deposit in a bank account that cannot be withdrawn before a fixed time period, and if we withdraw before the fixed time period, then penalty is applicable on the interest rate. It is of two types. The first one is fixed deposit and the second one is recurring deposit. Then we proceed towards the fixed deposit. Let's discuss it. It is a type of term deposit in which a lump sum amount of money is invested and we get a higher rate of interest than the normal savings account. If we withdraw money before its maturity date, then penalty is applicable on the interest rate. Minimum amount of deposit is 1,000 and there is no maximum limit. It is important to note that here we get interest rate higher than the savings account. So if you have the lump sum amount of money, it is better to choose a FD. Then we proceed towards the recurring deposit. It is a type of term deposit in which the customer make a regular deposit of a fixed sum over a period of time. Generally, in RD, we get a higher rate of interest than the savings account, but lower than the fixed deposit. Minimum time period is 6 months and maximum is 10 years. One can avail loans against the collateral of a recurring deposit up to 80 to 90% of the deposit value. That means if we have deposited 100 rupees in RD, then you can get 80 to 90 rupees against that deposit. Then we proceed towards the zero balance account. These accounts are generally opened by students and employee, and no minimum balance is required for this account. Here it is important to note that zero balance account, in zero balance account, if the balance exceeds 50,000 and the total credit exceeds 1 lakh in a year, no further transactions is permitted and maximum 4 withdrawal in a month is permitted. At last, we proceed towards the Demat account. Demat accounts are generally used for the share trading purpose. While we trade online, Demat accounts are used. It is similar to a bank account which holds money. A Demat account is an account which holds shares, bonds, etc. Thank you for watching this video.